What's up, traders? Chosen Jared's back here with another video for y'all. Happy New Year and cheers to a successful 2023. 2024 will be even greater. Today, I'll be going over the trading trifecta that makes a trade successful in my eye. Liquidity run paired with narrative, market structure shift, and displacement, also known as the trading trifecta in my eye, is crucial to anyone looking to master trading utilizing SET concepts. I have found these three concepts to have aided the growth of my trading skills. Let's dive into these concepts, and I hope you take something out of this video that you can add to your skill set. Let's get into it. Alright, let's talk about liquidity first. Liquidity are areas in the market where prices attract to moving. Areas of liquidity usually are placed at levels of relative equal lows and relative equal highs. Those levels are also where retail style minded traders have their stops at. The obvious highs and lows give smart money the opportunity to do price runs and take out these levels to activate orders and move price in its intended direction. So for example, this would be an area of liquidity, this would be an area of liquidity, this would be an area of liquidity, this would be an area of liquidity. Why are those areas of liquidity? Those are all areas of liquidity because those are areas where price eventually runs up into. So we can see here price runs up into here, taking out this relative equal high or even this simple draw of liquidity, and even doing a price run or stop rate, stop run into this fair value gap. This is also an area of liquidity because price ends up running and tapping into this draw of liquidity of where price will eventually tap into, as well as tapping into this area. So just think of liquidity as simply an area where price has to most likely reach to. So we can see in the example how liquidity is important in finding your setup, because as a New York session trader, I've marked up the session, the New York ICT kill zone from 7 to 10 a.m. Eastern. You see during the London session, the price runs up, drops a little bit, then does a stop, taking out these relative highs and piercing into this fair value gap or this inbound. Price runs up and runs up into this area, making this area, this zone, a balanced price range. So from here to here, it's a balanced price range because price was offering sell side and eventually repriced and rebalanced into buy side, making this level a balanced price range. So once price did that and did a stop, and price then went lower and continued to go lower, because we can see on higher time frame, and this is where narrative comes into play, that narrative is important, knowing where you want the market to go. So we can see on the far how narrative is important. And remember, this is an intraday setup, that's why 4 hours the higher time frame analysis where I make my bias. You can see here that price is aggressively moving lower and creating lower highs and lower lows. So let me just mark that up for you. Lower low or high, lower low, high, lower low, and now price wants to make a lower high. So I'm anticipating this level to be taken out right here eventually. Let's go back to the 5 minute. So now we're back here in the 5 minute. Now that we know that we have our narrative in place and we're looking only for shorts, we can see that this impulse move down in conjunction with this correction move gives us a balanced price range once again to continue to head the market lower. So in order to find our entry for those during the London session, let's pull out our fib tool and then we find our dealing range. Dealing range simply is a swing high to swing low. So we see the swing high to swing low, and entries usually are at the 0.62 or 0.79 since we're looking for a premium setup or a premium low. You could have entered here, that would have been nice, or you could have been patient and waited here, but let's go with the 79 and let me show you something. So we marked up our fair value gap, so an inbound. See here, we could have went short. Could have went short at the low. We could have went short at this order block that I'm going to talk about quick in just a sec. So first target here, and then second target right at this low. Then we had our stop just above this high. So we have a 1 to 6 setup. So as I was mentioning, this would be to me a bearish order block because of the change in state of delivery. And that's really what an order block is. An order block is the change in the state of delivery. Why is there a change in state of delivery? Because initially price was offering buy side, taking out, equal highs, relative equal highs. And then with this order block, we see a sudden shift or a change in state of delivery, a change in momentum. So now we see prices heading lower. The start of the order block starts here, but if you want to find like the midpoint and this was too big or too early of an entry for you, you could have entered right at the midpoint somewhere here. You could have entered here. You could have entered the low of this fair value. But for now, we'll just utilize this midpoint of the order block just as an eyeball. So now that Price is in our favor and we're moving lower. And just a disclaimer, I'm not a London session trader, I'm a New York trader. So this is how I'd take the setup if I was in New York. But I mean, the framework still apply regardless of the session, or at least London and New York are pretty parallel to each other. So now price is in profit. Now going into New York, we want to see a market structure shift, and that's something I'll be going over next. We want to see a market structure shift in order to find ourselves. So yeah, now that brings me to my second point. The second aspect of the trading trifecta that traders should implement their trading style is market structure shift. Market structure shift is important in knowing as a trader because it allows you to gauge if there's a reversal happening or a continuation move in a trending market. Market structure shift paired with displacement is a nice combination that provides a legitimate entry in the market, and I'll talk about displacement after the market structure shift. So now that we're heading lower, let's drop down to a lower time frame to see if we can get a better idea of where we can find a short-term higher low. Okay, what do you guys see here on the 1 minute? Let me know if you guys see a market, a short-term. Since we're going for shorts, we want to look for a short-term low. So I'll give you guys a second and let me know if you guys found it. All right, now I've given you guys time to figure out where there could be a potential short-term low that the market made a market structure shift. Let's dive into it. So for me, this would be the clear market structure shift. This is the market structure shift to me because we see a displacement candle, and that's important. That's an important part of knowing that you're on the right track of a market structure shift. Without displacement, the market structure shift to me is invalid. So now that we've broken through, we could have said we wanted to go short here for the market, or not go short. You could have said this is the short-term low, but there's no clear displacement candle showing that price wants to head lower. So this is more of a clear movement. So now that we've held that, we're going to see if we can find ourselves going to New York. Before I do that, okay. We can see here swing high to swing low for a dealing range. Price isn't ready just yet because there's no area of entry. Like I said, this would be a place where I don't want to take the short, but price hasn't really traded into, and this seems like it just touched and dropped. I want a clear touch into the fair value gap. That's one of my entry models. So we'll let the market play out. Let's go to the 3 minute so you can see what I'm seeing. Okay, price is running up. Heads lower. Okay, it's starting to correct. It's moving back up. Okay, let's stop right here. So now we're gonna adjust our dealing range. So this is the new swing high to swing low. Price is running up into our premium level. So let's see if we get an entry into the fair value gap. Okay, no, we didn't. Some traders would have taken the short here out of FOMO and not thinking that the market is going to leave them. But my trading plan calls for me to be patient and wait for it to at least tap the low of this value gap zone. So I would have left this alone and just let the trade play out. If it left me, so be it. If it comes back up into my entry, then we execute falls. So let's continue. Price is heading lower. Okay, it runs back up. Boom. Alright, let's adjust our dealing range again. We get our entry right here. So like I always say, you can go at the low, but if you're patient and you think it's gonna go up a little bit, you can adjust it. So you could have your first TP here, right at these relative equal low. Matter of fact, we'll do that. Just put it right here, first TP, and then so yeah, first TP, and then your second TP at this. All right. So now that we have this is our New York session setup, we can place our stops right above this high, because that's our structural high, because price went lower, created a lower high, then dropped and started to create lower highs and lower low. So yeah, this is our stop placement. Target levels, let's let the trader ride out. But before we do that, we see this displacement level is clear. So let's talk about displacement. And finally, last but certainly not least of the trading trifecta is displacement. Displacement is an energetic move in price that consists of high volume. Displacements are typically sudden, meaning the candle moves aggressively in the direction as it needs to go. Displacement also results in the creation of an imbalance, creating a fair value gap as mentioned earlier. This is the fair value gap. This is the fair value gap that is mentioned, also known as the displacement. And like I said, it's a sudden drop. See, this candle sticks out the most out of any of these candles for entry. It's high volume, it's sudden, it's a nice flush, a drop in momentum. So just something to be mindful of. And another thing is that sometimes price can create multiple displacements or multiple drops in candles or sudden energetic moves. You may be asking, how do I know which displacement to enter off of? Great question. So for me, using the fib tool and identifying the dealing range will help you find the OTE. Another way is to just enter off the low-hanging fruit. Low-hanging fruit, which is coined by CT, is the closest imbalance in a premium or discount level that price can tap into and deliver to liquidity levels. It can touch the low-hanging fruit, or it can trade deeper into other imbalances that are printing on the chart. The more conservative entry is the low-hanging fruit. So this is the, let's say there was multiple candles of these, like one here, and then one below here. You would just simply use your fib tool and figure out where the premium level is, and then if it's within that range, you would just take the one that is attainable. And low-hanging fruit can just mean attainable level of market C that the market can tap into and move in your favor, because you don't want to be too ambitious with your entries. And with entries, you don't want to realistically know everybody's not catching 1 to 10, 1 to 8, 1 to 20, 1 to 50. Like, those are very ambitious setups. But if you can get you a nice 1 to 4, a nice 1 to 3, a nice 1 to 2, even a nice 1 to 5, you're doing something right in the market. So unless your stops are really tight and you've been in the game so long that you really know this is a bread and butter setup of yours, then, you know, so be it. I'm all for it. But for most people learning how to trade, and, you know, those trying to improve their skill set, utilizing the low-hanging fruit concept is very, very important. So yeah, let's continue to watch this on the 3-minute and see how price moves. Now that we've covered all three concepts of liquidity, market structure shift, and displacement. Price is floating around entry. Probably took, I want to make a note of this to you guys. Price probably took some break-even traders over here, those that rush to go break even quickly. So always give your trade some time to breathe, a chance to breathe, and let it just do its thing. Once it starts to head down here, then you can try to go break even, but it's too early to try to go break even. Let's continue. The trade is running up. Okay, let's see why it's running up. Let's draw our fib tool out again. Let's head to the 1 minute. So there is some relative equal highs right here, some sell-side liquidity that price wants to take out in order to attain more orders to push the market even lower. So this is definitely a manipulation move, smart money concept, where price is doing a power of 3, you could say. It accumulated, now it's to the manipulation. So this could technically be the real move. This is the real move too, but like I said, it's more of a conservative setup. This is the smart money power of 3 move. So accumulation, manipulation, and now we're anticipating this distribution. So I would add an extra entry here, but I would risk significantly less since I already have an entry here. And then same target levels. Same target levels. Then I would just aim for these highs, or even above this high, whichever floats your boat. Let's go to the 3 minute. Either one works. If you're really confident in the trade, you can just leave it here. If you want more of a conservative stop to, give your trade some room to breathe, then here. So I'm gonna just place it here. just for good trade management. We're already in profit for both trades, and remember, we're still in profit for this setup right here. So let's continue. Price is moving lower. It's dropping. Okay. Aggressively selling down. Deliver sell side to our first TP. This might have been an 830 candle news or just simple institutional sponsorship. Simple institution, yeah, 836. So yeah, possible 830 candle news or just institutional sponsorship just occurred. So yeah, we're aggressively heading lower and then anticipating the sell side delivery. So let's see. Hang up. Okay, boom. Runs up and then just flushes nicely. So beautiful trade. Price hits all TPs from London setup to the two setups in New York. We got 1 to 4 and a 1 to 5. So in total, this is a 1 to 9 that you bagged in one session, one pair. And that's the beauty of trading. These are the 3 concepts in trading that I found to significantly help the progression of my trading. So with liquidity, knowing where the market is heading, knowing where price is likely to draw to, paired with narrative. And narrative is simply just having a bias in the market, having directional bias of am I short or am I long for the day? Market structure shift, knowing if the move is a reversal or a continuation setup. And then finally displacement, having that energetic or sudden move in the candle with high volume where you can eventually enter for a setup. And that's the beauty of trading here, guys. We can see here that, like I said, there's 1 to 4, 1 to 5 with a 1 to 9. And then if you also entered in New York, 1 to 6. So in total, you bagged 1 to 15 all in a span of 2 sessions, but really in just 1 full trading day. So that's very beautiful. And the beauty of trading is that every trader has their own personal style that makes them profitable for markets. I'm sharing with you all mine and hope you guys can take this and implement it to your own personal trading journey. So if you find this to be helpful, utilize it, make the most of it. Sharing with you guys my journey, my style, what works for me, and in 2024, let's become profitable. Thank you guys for watching this video. If you found value in learning about the trading trifecta, like, comment, share, and most importantly, subscribe. Your support helps to grow the channel and helps traders on their journey. I appreciate you guys all taking the time to listen to me share the trading trifecta and how it has tremendously helped and improved my trading skill set. With that being said, signing out, Chosen.